What's up, everybody? Welcome to a quick video about the state of Ethereum. Hope you're having a good first day of November. At the time of this recording, Ethereum is at a 43.10 valuation according to our market price data. I'll be going over some on-chain and social metrics here today, and a few other metrics that you may not have known that Santiment offers to really give you an indication as to what our staff really value as the best leading indications as to where prices will move next based on our metrics' current standings. So let's jump right into it and begin with circulation, which we typically like to look at as, or at least personally, I like to look at it as our first really primary metric that'll give us a snapshot of where markets currently stand according to the actual utility of the asset. Utility, as we've discussed significantly in previous calls, is one of the primary foundation blocks to indicate where prices will go next. More utility, as you would imagine, equals more price gains over time due to an increased amount of unique tokens moving from address to address. Of course, the amount of unique addresses, which is known as address activity, we'll get to in just a moment, but we'll start here with the actual amount of coins moving from one address to another. If we look at the last 6 months here, we can see that there was a significant rise right at the top, and then we had this huge fall. The reason circulation doesn't work as just its own metric is because circulation can happen often because of big whale sell-offs and big whale accumulations and everything in between for medium and small size traders as well. So when we did see this big top, notice that circulation was actually rising. But if we were to combine it with some other metrics like MVRV, which we'll look at in a moment around the same local top, you'll notice that this was coinciding with large profits from traders at that time, which is a bad thing. So we'll get into more of that in a moment. But notice that where we are now, we didn't quite see the organic rise in circulation that we would be hoping for from Ethereum. On Bitcoin, on the other hand, we saw a really nice steady rise in circulation. But on Ethereum, it looks as though it more or less hit its 4,400 plus all-time high with the aid of Bitcoin simply propping up the rest of the crypto markets a bit. And Ethereum was one that was kind of coasting, so to speak. It wasn't necessarily dropping off a cliff in terms of circulation, but it was definitely staying kind of flat. And it did get a nice uptick right at the close of October, which was encouraging. And where we stand now, we're kind of looking at a pretty average Monday in terms of circulation. Now, in tandem with circulation, we have a Sandsheets model available to all of our Sandbase Pro members, and they can check in on this anytime they would like. What it does is it has a 5-color scale, red being bearish, as you might intuitively imagine, and green being bullish, with orange, yellow, and yellowish green kind of filling in those middle semi-bearish, neutral, and semi-bullish ranges respectively. Where we are now, after about 5 straight months of semi-bearishness, we're back in neutral territory, at least to kick off November. Now, obviously, take it with a grain of salt because this is only one day, which is why today's hash mark coincides with the average for the month of November. Usually after about a week to a week and a half or so, we start to get enough of a sample size to actually be confident in the signal. Now, in recent months, like I said, circulation for Ethereum was actually a bit stagnant after we saw about a year straight of bullishness where the price was really taking off, right? And as soon as we got to this orange bar, notice there was some volatility. And even though prices kind of bounced up and rose, it wasn't in the organic nature, just huge month after huge month that we saw in the bullish territory here. And yes, we saw an all-time high despite this, which might make you believe this model is just not that accurate. Trust me, it's pretty good, right? For a singular model to indicate where prices will go next. You can look at the historical direction of prices according to these colors, see the red bars here and how things really stagnated, green bars, things really exploded, orange bars kind of stagnated as well. it does typically work well over time. You just have to look at this as a very macro chart. And where we are now, we're basically, you know, considering this is one day, I'd still kind of call it semi-bearishness until we have enough days to really indicate that this is a real turnaround. And if we do see a real turnaround, that's going to be a great confident booster, assuming that Bitcoin's own model stays pretty smooth itself. And it ended October with a semi-bullish signal on its own, which is a very good sign. And the reason why Ethereum and many other assets were able to thrive, even if they didn't have the greatest circulation themselves. That being said, let's go back to Sandbase here, app.santiment.net, looking at the charts section, and we're going to go down next to the aforementioned daily active address chart, where we can see a similar phenomenon that happened right at the top back here in May, where active addresses hit 6-month high and essentially dropped off a cliff thereafter, pretty much because Bitcoin's price plummeted. The rest of the markets did as well. That being said, there wasn't a massive drop off in address activity, with apologies to, around mid-June, where things were really starting to look a bit concerning, and we did bottom out here. But look at where we are here just over the past month, pretty much through the month of October. We had a really nice rise, and you can kind of tell through the volatility just by looking at this smooth 30-day moving average that we are getting back closer to where we were prior to the drop. We're not quite there yet, but this 30-day average is the best it's been since mid-June-ish or so. It looks like, yeah, mid-June, right about. And that's a good sign, right? When active addresses are moving up organically along with prices, generally a sign that it isn't, just a flash in the pan like these singular spikes here. And when it's not a rapid rise, it's usually not coinciding with a massive, whale sell-off or exchange inflow, something like that. Those are the warning signs where the active addresses might be more of a concerning sign than they seem. But in a vacuum, this climb is a positive thing. Next up, let's take a look at MVRV here briefly. What we're looking at right now is the pink 30-day return MVRV and the red 365-day MVRV. These two work well in tandem as kind of a short to mid-range snapshot of how traders are performing, and then a long-range snapshot of how traders are performing. Starting with the 30-day one, we'll see that we're still in the positive range. And positive range here is actually a mildly bearish sign. Anything over about, I'll mark it here, right at about 15%, give or take. This is going to be around the danger zone for the pink line. And the reason is, historically, anytime 30-day returns are exceeding about 0.5% or so per day since the investment or position typically begins, that's a sign that traders are profiting a little too rapidly in a metric where it's a 0% game, meaning there is an equal amount of positive and negative returns when blending up the average of all returns together. So, you can see right here, right before the local top happened on October 21st, we had the biggest spike above that danger zone in quite some time since early September, and there was an immediate correction. Since that time, we have still been in the positive range, but it's in a healthy enough positive range where it's not of major concern. In a vacuum, it is a slightly riskier time to be in Ethereum than usual, but also not a dangerous time according to historical evidence. That's all for him. Oh, actually, I'm sorry, 365 days as well. So this one works a bit differently. Keep in mind that the axis here on the red is about 3 times as large as the pink. So if we were to actually put these on the exact same axes, like so, I can go axis maximum 0.5 and axis minimum negative 0.5. And you can see that the red is kind of off the charts here. So that's why I've reduced it. But that gives you a little perspective of how the ranges go much higher and lower compared to the 30-day MVRV, as you might expect with a full year of trading returns having the ability to create a larger range between winners and losers. So I'll put it back at 1.5 and negative 1.5 really quick. And essentially, we're in a spot where at about 73% at the time of this writing, it is considered to be a more dangerous time than average to be in Ethereum, especially long-term traders, as you would imagine when let's go back to, I just want to see what the last year of returns were percentage-wise. So if I highlight this whole thing by holding down Shift, you can see that the overall MVRV ratio has grown about 113% since that time. And price-wise, we'll just go from right there, close enough. It looks like it's exceeded about 1,020% in terms of raw price gains for Ethereum. So clearly, when you look at that kind of gain, it's no shock to know that the long-term traders, the ones that opened their positions 1 year ago, still are well above average through all of their FOMOing and FUDing and everything else in between. So this means it's a slight concern, not a major concern like it was here. Notice how this was the 1 year top for 1 year MVRV, and it happened right as that massive all-time high at the time was occurring, and then Ethereum essentially dropped more than 50%. I think it was close to 55, even 57%, if I remember the number fairly accurately. So keep this in mind that when you start to get over like the 100% territory for 1 year MVRV, that's a sign that we're really starting to overheat. You can see you got very close here in early September when the entire market corrected with Bitcoin plummeting, but Ethereum was no exception. So that's MVRV. Let's take a quick look at funding rate. You'll notice there's a ton of lines here that look kind of jumbled. So I'm going to highlight one at a time and just focus on the horizontal line that is consistent. That's the 0% mark. And whenever the funding rate is above 0%, technically above like what was it? Yeah, 0.01% is kind of the resting state on exchanges. It's not actually 0%. But if it's above 0.01%, that means that longs are paying shorts at a larger degree than expected, meaning there's a bullish bias. And when there's a bullish bias, that's a bad thing because it means that too much of the crowd is longing and expecting for the price to go up in a game where prices tend to move in the direction of crowd least expectation. So right now, after we saw this little hump here in yellow, we're still slightly above 0.01%, but it's not a major spike. It is on Binance, which I would probably put the most credence into out of these four funding rates. It's just a slight bullish bias at about 0.0207%. And that is pretty much in the healthy range. If you start seeing it around here, above 0.06% for Ethereum for Binance funding rate, that's around the time where you've got to be a little bit cautious, just like you saw here. And then you can see the same thing for BUSD. So they have a USDT funding rate and a BUSD funding rate that we track. And pretty much the blue one really has called tops well. You can see this one here right at the top before it plummeted in early September. And then another one here where there was more of a minor plummet and eventually some volatility on October 21st. And then really quickly on the BitMEX side of things, we are a little above 0.01%, obviously, but nothing compared to where we were back in January, all the way through, May or so. And then we actually, it's always been a little positive on BitMEX, but the closer it is to 0.01%, the better. And we're actually in pretty much neutral territory relative to where things were earlier this year. So that's a good thing. Last but not least, FTX funding rate, our brand new funding rate, is indicating that we are, again, just like the BitMEX funding rate, above average, but only very slightly. And that's, again, another good thing because it means there isn't a huge ratio of longs paying shorts, which would indicate that we're getting a bit overheated and greedy. So that's a quick snapshot of funding rates. By the way, all of this information is available on our Academy. You can go to academy.santiment.net, or just come on into our Discord server, ping one of our staff members, and we will be more than happy to help give you some additional explanation, particularly if you're a pro member where you have real-time data, just like the metrics that I'm showing you guys right now. Next up is our social volume and social dominance. And what I like about these is it doesn't base future price movement off of usage or utility. This is solely based on perception and sentiment according to our algorithms that track social platform data. We use Twitter, Reddit, Telegram, and Discord, as well as some pro traders chats. So between those five, we have a pretty good comprehensive snapshot of data to make pretty good educated guesses as to where prices are going next. Social volume is measuring the total amounts of, hashtag Ethereum or just ETH on these platforms. So just the raw sum. And social dominance, which is a bit more interesting in my opinion, actually divides the percentage of mentions of Ethereum and ETH compared to all of the other hashtags of the top 100 market cap assets. So regardless of what time of day, whether there's just less conversation at 1 a.m., Pacific time, or, some really prime time hour like 4 p.m. Pacific time, it blends that all together and ignores the time constraints to give you a nice percentage basis of how much people are talking about Ethereum relative to the other assets. So when we look at social data, we like to look at the spikes in both the social volume and social dominance, particularly when they are coming together like this. Now on May 3rd, we had a huge one-year high in social volume, and it looks like the second highest spike in social dominance. And about 1 week, 10 days later, actually about exactly 1 week later, we hit the then all-time high before dropping off a cliff. You can see here we had another social dominance spike here as prices were really surging. And it's hard to see, but we did have a mild correction before interest kind of waned again. And once the interest waned, that's when prices resumed going up, right until we had another social dominance spike. And that indicated we would shortly have some sort of minor correction, which we did. And so these dominance spikes aren't always going to be perfect. They're a little more perfect actually for assets not named Bitcoin and Ethereum, which are always being discussed regardless of whether the price is going down. But if you look at like the 203rd market cap asset, whatever that is at this time, it generally won't be talked about much unless it's having extreme price action. And that's where using these kinds of metrics can really come in handy, because all of a sudden you'll see a huge dominant spike out of nowhere, indicating that there's crowd recognition around the price action going on with that coin. And usually those dominant spikes indicate a correction if the price is going up, or very seldomly a bounce if the crowd is discussing an asset's price dropping off a cliff. All right, a couple more. Mean dollar invested age is one I really like. It measures the amount, the average amount of days that an investment has been made in any particular asset. So right now, the average invested age for Ethereum is about 186 days. And generally when the slope is moving down, that is a solid indication that the price will be improving due to dormant coins that had been sitting in their wallets for a long time being moved, which ultimately leads to the dollar invested age going down. Because some investment that was 1,000 days old, if it's moved, that's suddenly reset to 0 days, and that's going to lower the overall average of Ethereum. And that's the kind of thing that we try to look for with a metric like this, is how much dormancy is there in the asset. The less dormancy, the better chance we have an improvement in circulation or daily active addresses. So when you look for indications as to where prices are going next, look for more of a flattening line, which we've kind of been seeing for a while. This is a very macro indicator, but we're not seeing a steady rise like this Like if I were to back up a little more, let's go to just the last 5 years of Ethereum, which is the vast majority of the time it's existed in a publicly traded form. Notice this long stretch where it was really just rising up the invested age from January of 2018 all the way up until July of 2020. That 2.5 year period just saw the mean dollar invested age go from 64 days all the way up to 564 days. And that would indicate that coins and addresses are becoming very dormant with their investments of Ethereum. And that is a bad thing. And that's why you saw all of this stagnancy with the price before. What do you know? Right when it topped out and started to drop, that's when we saw this initial price rise in July 2020. It had a little more volatility because it's not just ever going to be this obvious where things drop and boom, it explodes. But eventually you'll see enough upward movement, and dormant coins as a result of that will really start to flow and propel the price upward. You'll notice right here, right when things started to flatten out after this huge market-wide correction, that was obviously the time to really see a warning that it might be time to take some profit. And afterwards it rose again, but it hasn't been going at this upward trajectory indicating another bear or flat market is approaching. It's actually staying relatively flat, which is encouraging. It means that there's a decent amount of dormant coins moving around right now. It's nothing extremely exciting like one of these downward slopes, but it at minimum is showing that addresses aren't just becoming dormant all over again, especially with the all-time high just hitting again last week. People are very interested to see where prices are going to go next. Are we going to get up to about that 5,000 range where people might be planning on more profit taking? Or are we going to kind of slump back down to that $3,000 or even $2,000 level? People are waiting to find out and are going to react according to that. So give this metric a close eye because it's a really effective one on the long-term scale. Let's see, weighted sentiment. I'll keep this one short. When you see these big spikes here, these indicate a level of euphoria for Ethereum. When prices rise, you'll often see euphoria kick in, and right afterwards is when the price corrections occur. You can see very clearly that it happened here on May 3rd. And then about a week, almost a week and a half between this spike and the eventual price correction that happened here. But in most of these spikes cases, you'll see an inevitable price correction. This one hit it perfectly on February 11th. May 11th was a little more of a neutral one, but it eventually took a bit of a plummet. You get the idea. The larger the spikes are, the more confident that a price correction or at least a price direction change will occur. So keep this one in mind. It's another good, I'd call it a medium to long-term indicator. And then last but not least, Ethereum is an interesting one when it comes to whales. There's no perfect tier that we typically look at and say these traders holding this amount are the ones that really dictate where prices are going to go next. Even Bitcoin's a bit easier to keep an eye on compared to Ethereum. But I have found that the really, really massive Ethereum addresses, in this case, these are all billion-dollar addresses. And our staff will have debates about which one the best one is. Some might say the 100 or 1,000 to 10,000 to 10,000 to 100,000 tiers might have the most indicative alpha for whale behavior. But I like to look at this one because it actually does show some interesting things, especially more recently. I'm going to we'll do the last 2 years. Because keep in mind, Ethereum is only about a 6-year-old asset. It's certainly not, 12 years old the way Bitcoin is. 12, almost 13 at this point. But look at how the amount of supply held by these 1 million to 10 million ETH addresses have grown over time between the beginning of November of 2019, topping out here in April of 2021. This was actually a week before Bitcoin's all-time high, interestingly. and then we got a rebound here, and it actually got its second top right before its actual all-time high here on May 11th, or at least all-time high at the time before we just got our recent one. And then notice how it dropped off a cliff even as the price was rising. I'll zoom in here really quick. So notice how it really peaked here. We had the eventual price action still going up a little bit despite the big drop in supply held. The a million to 10 million coin addresses held 20.9% on May 9th and only 18.9% on May 11th, despite the price actually topping out on May 12th. But this is a bearish divergence here very clearly because these massive wallets took off 2% of their supply, basically dumped it, and eventually this all-time hit. And if we zoom out again, we'll go to the last year. Eventually the price obviously dropped off a cliff, but this didn't happen in real time with the shedding of these coins. They all were already dumping prior to the major dip that occurred. So keep that in mind because there really will be a nice leading indication sometimes, just like we saw a positive bullish indication here beginning on June 15th. These addresses held 17.8%, and they got all the way up to 19.6% within just about a month, give or take. And this would have been a nice bullish indication that things could be turning around. Obviously, we did see a dip here again, but eventually we saw the big rise, and this was a nice justification that prices can continue climbing. Just recently, if you're wondering what's going on over the past week, we did see a drop in supply from 21.8% down to about 21.0%. And with that, we could definitely advise a bit of caution here. It's certainly not a massive dump, but it's enough where it would be kind of a yellow flag indicating, we are starting to see, at least as of now, a mild dump in supply by the million to 10 million Ethereum addresses out there. So, all that being said, we definitely want to hear your opinions on whether these metrics and the explanations I gave made sense. We're super receptive to criticisms. So let us know if there's a way we can kind of explain these further for you and really get you comfortable with everything we're talking about. And of course, remember that we go over these comprehensively, not just for Ethereum, but obviously for Bitcoin and several other altcoins that you guys may request for us to cover on our This Week in Crypto calls every Friday at 2 p.m. UTC. So I hope to see you on those calls, and I hope you guys got a little something out of this. Appreciate it. Talk to y'all soon.